Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So, again, since I'm looking at a daily chart, I'd rather give myself some time. Would 19 days be enough? Sure, but just in case it takes a little bit longer, I could look at the November contract. I could look at the D's contract. Okay? Where do I suspect the market would go? Well, if I'm looking from a support standpoint here, I'm looking for a move higher. I don't mind getting into a strike that's up near this high here at 72. I really don't. Because as long as it moves in my direction, and if it moves even with a little bit of volatility, I'm going to see an increase in the value of that option, especially since I'm buying it at such a quiet time. Okay? I hope everyone's understanding the value of doing that in particular. All right? Understand the value of getting into these options when we are able to capitalize on this quiet market. Okay? Just bear with me a moment. I'm going to open up my chat window here so I can see the comments. So just bear with me one moment.
Raghee, there is a question,
Okay.
Steve. In a range-bound market, this is J. Paul saying, in a range-bound FX market, I trade the oscillations. The options would be to trade the breakout movement. I guess he's asking, does that make sense? You know, do you sort of look to trade ranges and then sort of look to the options market in case it breaks out of those ranges?
Well, yeah, absolutely. This is from J. Paul. Yeah, absolutely. In a range-bound Forex market, trading the oscillations. Well, here's where I would tell you that you could utilize the option at the same time. If you are trading, say, when you say oscillations, I'm going to read that as meaning shorting ceilings and buying floors.
I think
if you're shorting ceilings and buying floors, I would probably tell you that go ahead and continue to do that with whatever methodology you've got, whether it's overbought, oversold indicators like stochastic or RSI or whatever you're doing. But here's the flip side. Eventually, a range-bound market, while you're profiting from the internal movement, will break out or break down. Can we somewhat agree on that? Because if you believe that is the end result of a range-bound movement, at some point that range will break, and then we'll shift into a trending or shift into a breakout from ceiling or, okay, then what I would tell you is go ahead and play your range-bound movement, okay, but utilize the option for when and if that coil unsprings. So do you see that you don't have to necessarily change the way you're trading now. You're fortifying, you're supplementing, not supplanting with the options. You know, when I talk to Forex traders, they always say, well, do I have to trade options instead of my pairs? I said, no. What you're doing is you're doing both. Okay? Now, again, if you're trading a range-bound market like that, go ahead and play the ceilings and floors like you normally would. We're not here to change your approach, especially if it's working for you. But what I will say is if you don't have that option, waiting for when the market explodes from that range, again, think of that coiled spring, you're missing out on a tremendous opportunity by not having that. And let's say we're looking at the euro-US dollar here, and the EUI FX, ISE FX option. If I didn't have my option waiting here, could I play the range within the week? I did on intraday charts. Absolutely. On intraday charts, I was actually doing a lot of what you were doing there, J. Paul, where I was looking at shorting ceilings and buying floors. But eventually, I knew that would yield to my getting stopped out once the ceiling was broken or the floor. And that's where having the EUI really, especially with the kind of volatility, who knew, right? I think the psychology was out there, but who knew? It would go to that extreme. You saw the movement on the dollar, $2, I believe. We moved 2 full points in the dollar index, which was crazy, U.S. dollar index. So who knew the volatility would be cranked up that much? But that's exactly why having that option was even better than my having the dollar index futures, even better than having my euro-U.S. dollar spot position. So again, it's not a matter of supplanting what you're doing. Okay? If you're an options trader, then you already know the benefit of having these. and being able to play the FX market with these. But if you're a current spot trader, as most of the traders that I meet are right now, I want you to understand how when you have the timing down right, how much better and more effective you're optimizing not only your leverage, but you're able to capitalize on these market cycles, I think, in a very low-risk way. Because here's the flip side of that same conversation. For those people who may not have the skill in playing the range-bound markets, may not enjoy playing that kind of contrarian buying the ceiling, shorting the ceiling, buying the floor. If you're nervous, saying, hey, this market is going to explode, that's exactly when you can satisfy it, not only your kind of risk aversion for not wanting to take on this current psychology, underlying psychology of this market right now. You know, we knew this was brewing for a little while, right? We knew this was brewing in terms of what is this bailout package going to look like, what's happening to the credit market, what's happening to the dollar, is there going to be a surprise rate cut, those types of things. Because anyone looking at Fed Fund futures right now would also see that just the other day they were factoring in a 50 basis point cut for the December Fed Fund futures contract. When you look at that and you look at the dollar index and you go, oh, wow, I might be dealing with a completely, at a left field surprise rate cut, it would increase volatility in the market, but what if I'm on the wrong side? I'm risk averse. I don't want to engage the market. Options, my friends. Absolutely, that's when you can absolutely engage, utilize the options. So, and there's another question I see here regarding, do I commonly straddle these range-bound markets? I won't say commonly, but I will if I can take advantage of these quiet markets and I can't get a good read on where I feel the market's likely to go to. Now, right now, because we are near that 80 level on the dollar index, and we're near that floor on the euro-U.S. dollar, there are certain, I can kind of play that support and resistance a little bit more and pick a side, so to speak. But if you don't want to pick a side, and again, another advantage of having the option is you can straddle with absolute knowledge that your risk is limited. And that, again, that's a great way to straddle. A little bit more complicated, but not really. It's not really, right? You're playing a range-bound market such as this, and you're looking to play the breakout or breakdown. Now, let's say we go into something like a trending market. I could look at the cable and look at that on, say, a 240-minute time frame. Okay, what happens when you're taking a look at a market like this, where I may not necessarily, let's overlay the cable with the coordinating ISE FX symbol here, and that would be BPX. So again, on my E signal, that would be BPX. And by the way, here's a, I showed you the website from the ISE, which again is just tremendously helpful. If you want to, bear with me 1 second here. Okay, can you guys still see my charts here?
Yes,
Okay.
There is a little box at the bottom that seems like something's wrong, but yeah, we can still see your charts.
Okay, yeah, it's a little stuck right now, but
right.
Let me. That's unfortunate. Okay, let me. Let's see if I can. I just upgraded my system to a Windows Vista. So
Uh-oh.
And the computer's only about 7-8 days old, so hopefully I won't lose this. Okay, but anyways, let me carry on with what I was saying. The symbols that I'm using on this charting here, on my e-signal, you can absolutely head on over to quote.com, and I've got no particular, wherever you want to pull your charts from is totally up to you, but just so you can do a little bit of what I'm doing, if you want to do these overlays like I'm doing right now, or if you want to put some of these symbols on charts with maybe some of your favorite indicators, okay? Remember, this is like an ETF. When I'm looking at the BPX or anything like that, it's much more akin to an ETF. So if you want to overlay your favorite indicators on the chart, absolutely. Head on over to quote.com or whatever you prefer and do so.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcast.